So you hear the term mutual fund thrown around all the time, right? But what is it really? Well, today we're going to cut through all the noise and the jargon. We're going to get to the heart of this incredibly popular investment tool using the official NISM workbook as our guide to break it all down. Let's jump in.
I think we've all asked ourselves this question at some point. What is the absolute best investment out there? Is it a certain stock? Is it gold? Real estate? And the truth is, while it's a simple question, the answer is, well, it's complicated. Because the best investment really just depends on you. And figuring that all out by yourself, that can be a huge, huge challenge.
Let's think about it like this. Trying to manage all of your investments on your own is kind of like taking a massive solo road trip. You're the one behind the wheel, you're the one reading the map, and you're the one who has to fix the engine if it breaks down. It sounds like an adventure, and it can be, but wow, that is a ton of responsibility to put on your own shoulders.
And that solo trip has some serious challenges. First, you have to find the right destinations. Which are the right investments for you? Then you have to map out the entire route, which means doing tons and tons of research. Then there's all the paperwork, the constant administration. It's a lot. And maybe the hardest part? You have to be the calm, cool-headed driver that doesn't swerve off the road just because the weather gets a little stormy or the market gets bumpy. It takes a ton of time, a ton of expertise, and a lot of emotional control.
So when you see all that work laid out, you have to wonder, isn't there an easier way to do this? A way to get to all your financial destinations without having to personally manage every single little detail of the trip?
And that's where this idea comes in, the mutual fund. Let's just forget that solo car for a minute. Instead, imagine hopping onto a comfortable, professionally guided tour bus. You still get to see all the incredible sights, but now you've got an expert handling the map, the driving, and all the logistics for you.
Okay, so here's the official definition. A mutual fund basically pools money from a whole bunch of investors. Think of them as all the passengers on the bus. Then a professional fund manager, that's your expert tour guide, takes all that money and invests it in a wide variety of different things. And that becomes your itinerary, a diversified portfolio, all managed for you.
This quote from the source material just hits the nail on the head. The fund isn't the destination itself, it's the vehicle that gets you to all the different destinations. It's a completely different way of investing, one that gives you access to a professional guide and an instantly diverse itinerary that would be really, really tough to build by yourself.
So, how does this tour bus actually work? Let's pop the hood and take a look at the mechanics behind it.
It's actually a pretty straightforward process. First, all the investors pool their money together when they buy units in the fund. You can just think of those as the tickets for the bus. Second, the fund manager, the driver, takes that big pool of money and invests it. Third, they use it to build a diversified portfolio with lots of different assets. And finally, any profits or losses from that whole portfolio are shared proportionally among all the investors, all the passengers on the bus.
So what's a ticket cost? Well, in the mutual fund world, that's called the net asset value, or NAV. It's basically the price for one single unit or one ticket for the fund, and it's not a fixed price. It actually changes every single day, depending on how the fund's investments are doing.
And how do they figure out that daily ticket price? Well, it's through a process called mark-to-market. It sounds technical, but the idea is simple. Every day, the fund adds up the current market value of every single thing it owns. This is so important because it means the price you pay to get on or off that bus is always fair and up to date, reflecting the true, real-time value of everything in the portfolio.
Now, of course, just like any group tour, it's not all perfect. There are some amazing benefits, but there are also some trade-offs you need to know about. So let's get into the pros and cons.
The advantages are pretty clear, right? You get that professional management, your expert tour guide. You get instant diversification. You get what's called economies of scale, which just means lower costs because you're buying in bulk. And they're super flexible. It's easy to buy or sell your spot on the tour. On the flip side, you don't have total control. You can't just tell the bus driver to make a personal detour for you. And this is the big one. There are no guaranteed returns. Like any trip into the market, some days might be a little rainy.
And not all tours are created equal. Some are for thrill seekers who want to go mountain climbing, while others are for people who just want a relaxing trip to the beach. Mutual funds are exactly the same. You've got to pick the tour that actually matches the destination you want to reach. This chart breaks it down perfectly. You've got equity funds, which are all about capital appreciation. Think of these as the adventure tour. They're aiming for high growth, but they come with higher risk. Then you have debt funds, which are focused on regular income. These are more like a steady, scenic drive with much lower risk. And what about hybrid funds? Well, they're a mix of both, trying to balance growth and income for a medium risk level.
So after all that, the big decision comes right back to you. The whole point here is to give you the information so you can decide if this guided tour approach is the right fit for your own financial journey.
You know, this final quote might just be the single most important thing to remember from all of this. With a mutual fund, you're not getting a different product. You're getting a different way of investing. It's a vehicle to access the same stocks and bonds you could buy yourself. You're simply choosing the guided tour method over the solo road trip. It's the method that's different, not some magical new asset.
And that leaves us with the real question you need to ask yourself. Now that you understand the vehicle, the tour bus, where do you want it to take you? What financial destination are you trying to reach? Answering that question is the true first step of any investment journey.